All right. So I'm excited to be with you guys tonight. We're going to be talking about something that I think is very important, very crucial for anyone that is kind of diving into or even has been in the alternative investment space, especially as it relates to energy. Um, so the objective for this presentation is to help us become better investors, be able to give our money to the right people and get it back and then some, right? And so as we're going through the presentation, I'd encourage you to use that Q&A and just type your questions there. I've got a couple spots where we can stop and answer questions, but if it's related to something that we're talking about in the moment, then and like Lisa said, I can stop and kind of address it there. Um, this is really your guys' time too. I want to be able to make the most of it. So I have a few poll questions that we'll ask. I want to know kind of who I'm talking to, and we can uh, make it fit your guys's fit you guys in your needs. So all right, we will jump into it. So when we are looking at different sponsors or different opportunities to invest, there's three key steps. We need to figure out who we're going to be investing with. We need to see what questions and answers we need to have for the promoter, the sponsor, the person that I'm going to actually be giving money to. And then I think what's really important is to know what the motive is behind the person that's offering the opportunity, the investment. Um, I've learned from my own experience uh, that it's probably safest just to expect that someone's going to do what's in their best interest. And in the investment world, my objective as an investor is to find those people whose best interest, what's in their best interest is also in mine, right? Trust is great. You want to like the people, all of that. But a best case scenario is when the sponsor does well, I do well. That way I don't have to trust. Trust is just a luxury. I know that that person is going to be fighting to do everything that they can to be successful at the investment that I've put my money into. So there's a bunch of different asset classes, right? Go through and you can read all of them. A lot of them you already know. You've probably heard of quite a few. A couple that stand out. There was the carbon capture. That was one that was really popular for a couple of years and ended up being just an outright Ponzi scheme. The industry's real. It's actually happening, but there's not a whole lot of individuals that have proprietary information. These are usually giant companies that are doing these kinds of things. As we're looking through these different asset classes, I think that one of the things to keep in mind is to not confuse familiarity with safety. And so, we look at these different kinds of investments, and it might be things that we've heard of before, things that we've heard of other people being in. I mean, there's a lot of people that are into the car washes and the real estate syndications. And again, because it's familiar, it doesn't mean that it's safe or that it's low risk. It just is something that I might know a little bit more about. So let's start by asking some questions. I'm gonna pull these up here, but they're gonna at least I'll have them pop up on your screen, so you'll be able to see all of them all at once. But actually, I think I can just go ahead and do that. So I want to know, how much of your portfolio consists of alternative investments. We're going to be talking about how to judge these, how to determine what's a good one, what's not. So how much of your portfolio is already in them? Have you invested with a promoter who's lost your principal investment? Uh, this might be, I guess we'd say someone that did it on purpose, right? Or someone that maybe just got over their head in front of their skis and wasn't able to keep things together. Maybe it's real estate, and I know a lot of real estate investments right now are kind of sucking wind because of the increase in interest rates. And then last, have you considered oil and gas assets as a part of your tax strategy? And at the end of this, when we get past kind of the due diligence part, we'll talk more about that. Um, but yeah, if you'll take a minute and go through those, I want to know, what you guys think and who I'm talking to here, and we'll do some more. Uh, we'll do some more here in a few slides. All right. So 50%, let me make sure I'm reading it right. 50% of you have no alternative assets. 43% have about 0 to 25% of your assets. 57% have over half of it. All right. Have you invested with a promoter who's lost your principal? Uh, Man, this is pretty much split down the middle, right? Obviously, a little bit more that have said no than yes. Lisa, they can see these questions, they can see the responses too. Is that
That's correct.
okay? All right. And then have you considered it? So yeah, about the same. Um, it's kind of funny. Everyone that's considered it, it's 45% have considered oil and gas. That's also 45% who's lost money. I don't know if there's a correlation there or not. It's just causation or association. Um, but okay, click through that. So yeah, as we're looking at these different assets, these different opportunities, some of the questions that we need to ask, the things that we need to know, um, it can be kind of overwhelming because there's a lot of questions out there. We really need to get down to the fundamentals, right, of the investment and of the opportunity. So I need to know essentially what needs to happen in order for me to be successful, and what can happen in order for me to be unsuccessful. Okay. For instance, if I'm looking at some sort of a partnership or a fund of some sorts or a syndication, I need to know what kind of experience the people have. We'll talk about that in just a little bit. I need to know what the deal is. Do I have the ability to communicate freely with the people that are in charge? Am I going to know who the other people are that are investing with me? Um, if there's a capital call involved and I don't pay it, what happens? If the other people in the deal don't pay it, what ends up happening, right? I need to know what that structure is. I need to know the potential liability. All of these things that are listed here are just some of what you might want to be asking. I'm going to want to know too, I think if you look down at the bottom, the strategies and the solutions. So if things go right, if things go according to plan, what does that look like? What is my ultimate return, my end result? And that's usually what's gonna be getting us into the deal, right? Is they say, hey, if everything goes according to plan, we're gonna get you, XYZ return. We're gonna sell in 5 years, whatever it is. here's your ultimate result. Well, then when I start looking at the things that could go wrong, right? I look at what I guess those things that I might be worried about. What are going to be some of the solutions? Have you gone through it before? Or are we just kind of going through and kind of playing it by ear? So ultimately, it's up to you, right? It's up to you to find out the answers to these questions. It's up to you. No one is going to care more about your money and your results than you are. I said earlier, I expect that people do what's in their best interest. And I don't mean that in a mean way or a negative way. I just think anyone that's probably on this meeting or anywhere, if a decision has to be made and it comes down to your family or my family, I would expect that you're going to choose your family, right? You should expect that I'm going to choose what's best for my family. And so no one else on the outside, whether it's going to be the promoter themselves or even we end up talking to a lot of masterminds, they're going to care more about what's best for them and their group than they are about you. And so we really stress this because we find that a lot of people are very willing to trust others and just rely on their expertise to be able to tell them what we'll say even their supposed expertise to tell them what they think they should do. And to a degree, that's right. You need to be able to rely on other people's expertise, but you need to be able to know, are these people actually doing what's in my best interest or just in theirs? And if I'm someone that is complacent, someone that is like, hey, I'll just let someone else take the wheel entirely and not do my due diligence. Well, that's exactly what a lot of these promoters are looking for, is someone that won't ask the questions, that won't figure out who they're actually dealing with. And so the very first thing that we talk about, the who. If the opportunity cannot be fully verified, walk away. If the who cannot be verified, then it must be the boogeyman. So by that, really what we're talking about is know who you're getting into this deal with. Um, I think that the experiences that we've gone through with some of our investing partners, the experiences that they've shared with us, they've really just not known, they've not taken the steps to be able to see who they're actually investing with. Uh, You'd be surprised what you can pull up by just doing a quick Google search and saying, the name of the person that you're investing with and follow it up with fraud or lawsuit or criminal charges. And we'll get people that will ask us, because we're in the investment world, hey, can you look at this investment opportunity? Tell me what you think. What do you think of these people? What do you think of the opportunity? And in two Google searches, we can say, well, that person is a felon. And a lot of times the felony is even associated with uh, failed investments, right? Or just taking other people's money. And so it's something that again, complacency can really hurt you very quickly, right? It's something that just putting a little bit of effort, even a little bit in the front end, can make a world of difference to your overall outcome. And that might be even turning down some opportunities that sound really good. But in the long run, it's going to be better for you to just avoid those things if you really can't be sure who the person is that you're actually going to be investing with. As we're going through this, and we ask the different questions to these promoters, there's some pretty key things that you want to ask them directly. And I would say the best thing that you can do is not just to call them on the phone, but to get it in writing. Send an email and say what, as it says, a detailed record of historical performance, right? All of your third-party capital you've raised for the last 5 years. Is there a track record? I would add to that, is the track record relevant, right? Have they been doing good when times were good? Well, a lot of people can do that. Anyone can do that. What do they do during the downside of their industry, right? When the housing market was down, what were they doing? Did they lose money? Did they make money? Did they, how much money did they save their investors through their smart decisions? Provide a list of all known records of prior criminal or civil improprieties for all owners, managers, principals, and senior staff. Provide the public reports. This is, again, I said, doing a Google search, you can just ask them directly. Sometimes you're not going to know who is working for or with the face of the company. And so if you have people like we've seen in the past, you have people that are actually over due diligence for some of these, let's say due diligence for some of these uh, organizations that are criminals themselves. You'd want to know that, wouldn't you? Before you give them typically large sums of money. List any and all pending or threatening lawsuits from any investors or any claims of misrepresentation, SEC violations, associations of fraud or theft, or any accusations of financial wrongdoing in the last 5 years. I'd even say you can extend that out beyond that, right? People can come back from from the dark side, whatever. There's forgiveness, but doesn't mean I'm going to give you my money, right? You might be a great person now, may have completely changed your ways, but at the end of the day, when it comes down to who I'm giving my money to, the opportunity might look great, but if I can't trust you, I can't trust the sponsor, it's not going to be worth it. List any and all financial failures the last 5 to 10 years, such as bankruptcy, voluntary or involuntary, for any company you own greater than 10% or a senior manager or director. So again, just digging into someone's ability to actually lead. I think that there's a lot of voices, especially on social media. We see this pop up quite a bit. If you start looking at one alternative investment, you'll see 10 more that'll follow on your Facebook feed or Instagram, wherever you're at. And there's a lot of people that want to lead, right? They want to come off as the experts. They want to come off as the go-to person for whatever deal they're trying to sell. And that's great as long as they can back it up, right? With their experience. Doesn't mean that they need to have a perfect track record, right? People are going to fail. A lot of us that have built up great assets, great companies, have had some failures in the past. They have some scars, and that's okay. I'd say you want some people that have been through some hardships. That way, they know how to get themselves out of it. But you just want to make sure that it's the right kind of hardships, right? It was something that maybe the industry brought about, and not just something that could have easily been avoided, or at least what did they learn from it? The motive. You must determine what makes a sponsor go to the trouble of asking you to invest. If the motive is not explained and revealed, then it is not transparent, clearly suggests the cards are stacked against you. So again, going back uh, to someone's intentions with this. Um, you want to have alignment with what they need and what you need from the deal. Um, if you have some questions, you can put them in the Q&A. You can also put there in the chat. I'd be interested to know those of you that are doing alternative investments. What are some of the questions that you've asked? What are some things that have been helpful for you? Maybe that we can share with some of the people that have not experienced it. Um, it doesn't have to be a long spiel, but I'd be curious to know what questions you've asked that have been beneficial. Maybe it's helped you to avoid certain investments, or maybe it's helped you feel comfortable making them. So going back to motive, I think with the motive, it's not just going to be um, the money, right? Everyone is got to make money. If I'm gonna be offering you a deal, it would be expected that I'm going to profit off of it, right? Same for you. Someone's going to come into your practice. They're not going to expect that you're going to do the filling, put on the braces, whatever it is, free of charge. You're an expert at what you do, and it's only right that you get paid for it. So of course they're going to do it to get paid. But is there something else that's driving them? I guess I would say the situations that I've seen and heard of that have gotten people in bad situations is when the promoter or the sponsor has to sell you something in order to continue making a profit. And that might sound kind of redundant, because of course you have to sell something to make a profit. Well, not necessarily. Not if you're going to actually profit off of the investment yourself, right? If I see an opportunity that is bigger than what I can take on myself, well, then I can go aggregate capital. I can bring other people in with me, say, all right, let's all take our proportional piece of this and let's go take down this elephant one person at a time, right? Each of us helping each other. That would be the kind of motive that I would see would be positive. It also align our interests, right? That person wants this investment to be successful because they're going to profit off of it when it's successful, or they're going to lose if the whole thing fails. And so that's an important thing to try and figure out. If my whole way of staying afloat is to sell you an investment, to sell you a product, well, then my incentive is to get you to buy as much of that product as possible. And so, there's a bunch of opportunities out there to buy stuff. It doesn't mean that they're all good. So again, going to, we'll say like a piece of real estate, if I need to sell you a piece of real estate in order to make a lot of money, right, or in order to stay afloat, uh, keep keep paying the bills, paying for my employees, well then, if I get down to the end of my inventory, I'm going to have to go find something. It might not always be the best deal, but it's something that I can find so that I can offer to you. So if I'm coming to someone, or when I go to someone that's going to be offering investments, I want to know that they have some skin in the game. I want to know that they need this thing to be successful, as much as I do. And this goes right into what I was just saying. So what's your skin in the game? All right. Well, your firm or any of your principals of this sponsoring organization be investing in the same asset or opportunity? Will you provide copies of the contracts, the deeds, records, proof of ownership, or all records pertaining to this offering or asset being acquired? Will you provide a flow chart of all interrelated entities? This is a big one. This is something where these companies will have 5 other companies and will say, okay, I'm not trying to pick on real estate. It's just the easiest one because I think it's relatable. A lot of us know it. And there's been, I guess there's plenty of examples of these things. So I have a piece of real estate. We'll say it's an apartment complex. We're going to start a syndication. You guys are all going to come in. You're going to invest in it with me. But then I have a company that does the maintenance, right? I have a management company. Well, I'm going to be profiting off of the sale of the investment. I'm going to be profiting off of the management company, right? And so I can make my profit over here without having to take as much risk on the initial or the main investment. And so you want to know how these different companies are going to be interrelated. Okay. What will you provide in terms of access to proof of concept or evidence, what you're touting that you have done previously with such assets to provide proof of your claims? And so this is another one where what you've done in the past, is it relevant to the present and to the future? So are you able to replicate or duplicate what you did previously in this iteration or the next one, right? Or did you get lucky? Did you time the market right? There's going to be timing with all of it, right? That's going to can often be the difference between a great investment and a good investment. Is just getting the right timing. So there's nothing wrong with that. It's just making sure that we have enough real experience in order to be able to carry us through this investment. So I'm going to pause for a second and open it up to any questions. While we're waiting, if you guys have any that you want to put in, let's go ahead and jump into the poll questions. All right, so oil and gas investments, the most risky. Sounds about right. What's inflation going to do over the next 4 years? Majority of us think it's going to go up. Okay, what's the housing market? It's going to go up. Stock market going to do is going to go up. So all these things, everything's just on the up and up, right? Everything's going to increase, and we think that oil and gas is the most dangerous one of all of them. It might be true. It depends on how you invest in it. We will talk about that. And I'll tell you that obviously talking about oil and gas is my preference, but we'll look at some of these other ones too, some of these other due diligence questions, and then we'll get to that. The expertise and the experience. Really, I think you're probably going to feel like I'm beating a dead horse on this, and I probably am. I can't tell you. So I'll say with our company, we work with over 2,000 accredited investors. Okay, these are a lot of doctors, a lot of attorneys, engineers, very intelligent people that I would say are should be considered sophisticated investors, or we'll say have the ability to be sophisticated investors. And then they'll ask us, what are the, what we think about this opportunity. And, for some other sponsor, some other investment opportunity. And you look at the deal and it's something where you'd say, how are you even considering this? Um, you know, why have you not thrown this away to begin with? Why are you even looking at it? Because it just seems so blatant and so obvious. And so beating a dead horse because we really just don't know how else to help people not lose their investment, which maybe it sounds weird coming from an oil and gas investment company, especially when you say that oil and gas is probably the most risky investment that you can make. Um, but in reality, part of what we do, why we're doing this kind of presentation, is not just because we want to, expose our company to a new audience. Certainly, that's what we want to do. But ultimately, the more money that people lose by putting it into bad deals in oil and gas, in any kind of alternative investments, makes everyone look bad, right? Film ventures, the riskiest and most deceitful. Yeah, I would say that's probably not a great one either. Um, so, like I said, it hurts everyone, right? The more money that people lose, if we're being totally selfish, the less money that they're going to give us, right? Because that's a bruise, that's a pain point, something that you're going to have to overcome. And so I would rather, I'd rather you not lose the money. I'd rather you invest with people that are reputable. Um, so expertise requires extraordinary amounts of time, practical application, proven results, intellectual and fundamental levels of precision in order to be considered an expert. So really that's what we're looking for from these sponsors, and that's what we should be able to offer you as a sponsor, as someone that's coming to you with a deal. So this is one, maybe it's a little controversial, but I don't think so. So why are dentists such easy prey? It's a little direct, right? But ultimately, when you look into it, it tends to be pretty true from my experience of what I've seen across the investment world, and just historically what we've seen. But the answer would be why? Why do we make what are the such easy prey? So make lots of income, hopefully, right? Too busy to really pay attention. FOMO, fear of missing out, and then tax deductions. So talking about dentists, because this is a dental group, right? But these kind of things, if you have any of these kind of attributes, it doesn't matter what your profession is. But really, we think that because we do work with a lot of dentists, we think that what ends up making them so easy for people to kind of approach and get money from is, one, if you have a lot of money, you're usually willing to take more risk with it, right? Okay, if I'm making $1 million a year, well, then what's $250,000 to go into something? We'll try it out. We'll see if it's going to work or not. Too busy to really pay attention. I know how hard you guys work. Um, I think a lot of people don't realize it, but just standing, being bent over, having, your hands in people's mouths all day, it takes a lot of toll on your body, and it takes a lot of time. So even when you're off, you're probably wanting to recover and get ready for the next day, not go in and study everything out for every investment opportunity. Um, FOMO, fear of missing out. there's a lot of masterminds and investment groups that are geared specifically towards dentists. And we see that um, you get a deal, you start offering it to a few, they start sharing it with others and sharing it with others, and it just spreads, right? I mentioned the carbon capture deal before. That's coming out. Like I said, it was a Ponzi scheme from the very beginning. And the majority of people that invested into it was dentists. It was offered by someone who was a dentist previously. And so, he was able to kind of build relationships or capitalize on relationships. And people thought that they were missing out on something big. And it really is due to that last one there, that tax deductions. When you start looking at tax deductions, people seem to lose their minds. I mean, with that particular deal, you had people that were going to be able to get their tax deduction, but they could deduct even more if they went out and borrowed money to be able to put more of their money into the asset, into the investment. And when it turns out that it's not a real product, that it wasn't a company even, um, well, now they're stuck paying interest on debt, and they have nothing to show for it. And so, again, we talk about these things because it's very real. There's some very uh, hurt people, right? People that are uh, having to go back to work, that were in retirement because of that deal and deals that are like it. And we just don't want to see those kinds of things happening. All right. So, what are your goals as a dentist investor? Really, it could be what are your goals as any kind of investor, but again, we're dentists here. You are. So you want to invest with honest sponsors, understand the formation of the asset investments you intend to participate in, know who is in charge, and if they are real or hiding a seedy past. Know the real expertise and experience or lack thereof from the sponsor. Will not lose any money. Not let tax incentives make you lose your common sense. Create wealth and income from your investing to get you out from behind the chair. That was, gosh, as many dental professionals that I've talked to, um, it's I didn't realize I didn't realize growing up, or when I was thinking about what I wanted to be when I grew up, I didn't realize how much dentists made, right? How much money they could make. And then I didn't realize how many of them don't want to be doing what they're doing for the rest of their lives. Again, because it can be really hard on your body. It takes up a lot of time. And so what we know that when you're looking for investments, a lot of times it's going to be for cash flow, right? It's going to be to replace the income that you're making uh, working behind the chair. Um, and so really you have to be looking at like we said, the investment, the people that you're going with, and what you're going to do to not lose those dollars that you've been working hours and hours, years and years for.